Hi, this is Matt Clark, research analyst for Money and Markets, and your host of the Bull and the Bear podcast with your Money and Markets week ahead, what to watch on Wall Street. It's going to be another active week on Wall Street this week, even though we're inching closer to the holiday season, and usually once that rolls around, things tend to slow down quite a bit on Wall Street. But in the weeks before, it does tend to pick up just a little bit. I'm going to dive into a big initial public offering that's coming out this week, and the earnings of a company that's kind of fallen from grace, one you may have heard of and actually own products for, but probably don't anymore. Here are some things investors should watch for on Wall Street this week. Following a week with two very big initial public offerings, another substantial IPO plans to launch this week. Last week, if you remember, DoorDash Incorporated and Airbnb Incorporated both debuted on the market. DoorDash opened at about $180 a share, but was down about 7%, if not more, as of Thursday. Airbnb, on the other hand, was priced at $68 a share, but opened way higher than that. So a very successful, at least first day IPO for Airbnb. Now, next Thursday, e-commerce company ContextLogic will be launching its IPO. Now, you may not necessarily know ContextLogic, but you do know the name of its website. It's wish.com. It'll trade on the NASDAQ under the ticker symbol WISH. Now, in simple terms, Wish is an e-commerce site, but if you take a little bit broader look, it shows that it's more of a social platform that matches various merchants with prospective buyers of products. Wish serves customers in the US and in India, but most of its manufacturers of products are actually in China. For the first 9 months of the year, Wish notched a net loss of $176 million on revenue of $1.75 billion. In the same period a year ago, the company had a loss of $12 million on revenue of $1.33 billion. So both losses and revenue have gone up over the last year for ContextLogic. Now, the IPO terms, Wish plans to offer 46 million shares of stock at a price between $22 and $24 per share, according to its regulatory filing with the Securities and Exchange Commission. The intent is that the company hopes to raise about $1.1 billion if the stock sells at the top of that range. There's not necessarily a guarantee that it will, but if it does, then they're looking at a $1.1 billion raise from there. And it also could bring the valuation of the company to around $14.07 billion. Goldman Sachs, JP Morgan Chase, and Bank of America Securities are going to be the lead book running managers for the IPO, while Citigroup, Deutsche Bank Securities, UBS Investment Bank, RBC Capital Markets, and Credit Suisse are going to be the book running managers. Cowen, Oppenheimer Incorporated, Stifel, William Blair, Academy Securities, Loop Capital, and Arcelis and Company are going to be co-managers for the offering. Now, this is a very good time for IPOs, as investors seem to kind of have a big interest in new companies coming to market. SPACs have been kind of dominating the headlines of late with IPOs, but bigger companies have also brought their IPOs to market in the traditional sense, just like ContextLogic. The Renaissance IPO ETF, which trades on the New York Stock Exchange under, coincidentally, the ticker IPO, an exchange-traded fund that tracks IPOs, is up about 83.6% in 2020 compared to the S&P 500 index, which has actually only gained about 11%. So you can kind of see that IPOs have done very, very well, making this a very strong market for IPOs. What to expect in terms of Wish? I think the price point is right, and I think they're probably going to sell the 46 million shares. I'm just very cautious when it comes to IPOs. I know they have an initial bubble, unless you're DoorDash, when you don't, and then that usually tapers off and actually falls below the initial pricing in the weeks after. So I get very hesitant about recommending IPOs. I'm not necessarily a big fan. I kind of like to wait till after the lockup period to see what insider investors decide to do in terms of selling their shares. That usually gives a pretty good indication as to where the stock may be going. Now, this week in earnings is going to start a little slow, but it's going to ramp up towards the end of the week. One company that kind of caught my eye reporting this week is BlackBerry Limited. It trades on the New York Stock Exchange under the ticker BB. Now, I remember when BlackBerry phones were really all the rage. I had to have one, and I had one. I actually had two. Not at the same time, but I had one, and then I got another one. And I liked it. It was one of the first ones that had the keyboard that was out, and you could use a little side thing to scroll through your menu or scroll through your message or whatever. It was kind of a revolutionary thing, and it was kind of a fad item to have. And again, I was one who was part of that fad. But since then, I don't even know what they look. I don't even know what the phones look like anymore. I don't even know if they do make phones anymore. I know they make components for them, but this is kind of a different company. It used to be RIM, and now it's just BlackBerry Limited. But it got me thinking, now that this company is reporting earnings, how has this company performed so far? And so looking at the data, the company had its best 12 months of revenue back in 2017. It recorded $1.3 billion in total revenue. But since then, it's really kind of struggled to crack that $1 billion mark for total revenue. Its trailing 12-month revenue ending August 31st of 2020 was right at that $1 billion mark. One good sign for the company is that it has increased its net income over a period of time. Now, it's seen some ups and downs. In 2017, BlackBerry's net income was a negative $1.2 billion. Over the subsequent 12 months, a couple 12 months following, they were actually notching in the positive. Not by much, but it was positive. This year, which is kind of a different year as we've talked about before, that loss was just $732 million for the 12 months ending August of 2020. So if you compare 2017 with 2020, it appears to be a little bit better year in terms of losses for BlackBerry. Not that losses are good. Its trailing 12-month gross profit has also gotten better over the years. In 2017, profit was just $642 million. In the 12 months ending August of 2020, that profit went up to $755 million. Now, even though their phones aren't as widely marketed or sold, the company still has managed to increase its profits. My guess is a lot of that is by cutting expenses. As for quarterly earnings due out on Friday, I suspect those earnings are going to be flat at zero. They've been around the 1 cent to 5 cent per share range. I expect them to be around zero, maybe a cent, and probably not much more than that. That will be a drop from the penny per share that the company earned in the fourth quarter of 2019. The company has surprised Wall Street, however, in each of the last 4 quarters, reporting slightly positive earnings per share despite negative expectations. But the issue here is the company still struggles to make money and turn a profit. Products just haven't kept up with the times, and they haven't been able to keep up with companies like Apple or Samsung or Nokia or Ericsson. So in that realm, BlackBerry is just not there anymore. They used to be a leader. Now they're not even a follower. And it's a trend I think it's likely to continue for the immediate future. Now, on Tuesday, the Federal Reserve, in looking at our data dump, is going to give insights into the national industrial and manufacturing production sectors. The Fed's industrial production report measures the change in total inflation-adjusted value of output produced by manufacturers, mines, and utilities. In October, industrial production rose 1.1%, and that got them to about recovering from their 16.5% drop from February to April due to the coronavirus. However, industrial production is still 5.6% lower than pre-pandemic levels from even before February. Utilities output increased 3.9%. Mine output actually dropped 0.6% during the month. We kind of saw that as gold prices have kind of tapered just a little bit. They started to boost up a little bit. That might be an indicator that we could see mine productivity up a little bit higher in November. The total index was 103.2 of its 2012 average, so it's slightly higher. Still some optimism in rather national industrial manufacturing production. Analysts are expecting month-over-month increases of about 0.5% for November. That is slightly lower than the 1.1% rise in October. Now, manufacturing production levels were up 1% on a month-over-month basis in October, but analysts are projecting a slowdown in November as they gauge production to be up just about 0.5% in November. On Wednesday, the Census Bureau is going to release its monthly retail sales report for November. Now, remember, November is when the holiday shopping season starts, so this is going to be kind of a good indicator as to what retail sales can expect running out to the end of 2020. The report examines the change in total value of sales at the retail level. It's often used to kind of gauge consumer confidence. In October, monthly sales ticked up only slightly, about 0.3% from the previous month. That was substantially less than the 1.6% gain retail sales reported in September. Analysts have a forecast actually of a minus 0.1% drop for sales in November on a month-over-month basis, despite holiday shopping season getting kicked off after Thanksgiving. Now, later on Wednesday, the Federal Open Markets Committee, or FOMC, is going to conclude its 2-day December meeting, and the Federal Reserve Chair Jerome Powell is going to discuss the Fed's interest rate policy, which, not a real secret here, is going to remain unchanged, keeping interest rates at between 0% and 0.25%. So not a real big shocker there from whatever Chairman Powell comes out with and discusses on Wednesday. Finally, on Thursday, the Federal Reserve Bank of Kansas City is going to release its manufacturing activity survey. This tracks manufacturing activity in the 10th Federal Reserve District, which includes Kansas, Colorado, Nebraska, Oklahoma, Wyoming, and parts of Missouri and New Mexico. In November, the composite index was right at 11, slightly lower than the 13 reported in October. This indicated a slight slowdown, but still some modest growth in activity. Probably going to be about the same, if not maybe even tick a little lower. Now, to finish off your money markets week ahead, here's a look at some of the key earnings reports that are due out this week. On Monday, Hexo Corporation and Vince Holding Company Corporation will be reporting on Monday. Tuesday, Nordson Corporation and Aspen Group Incorporated will report. Wednesday, you'll see Lennar Corporation, Winnebago Industries, the popular RV manufacturer, and Bluebird Corporation will be reporting earnings on Wednesday. On Thursday, things tick up a little bit in terms of familiar names. FedEx Corporation, Cintas Corporation, General Mills Incorporated, BlackBerry Limited, and Rite Aid Corporation will all report on Thursday. On Friday, a couple big names here and ones you might want to watch out for. Nike Incorporated and Carnival Corporation, the flagship, the ship company for cruise lines, will be reporting on Friday. Be interesting to see kind of what Carnival has in store in terms of its earnings, more specifically what its forecast may or may not be. So that's what we have for coming up next week on Wall Street. Glad you tuned in. Until then, I'm Matt Clark, research analyst for Money Markets and your host of the Bull and Bear podcast. Until next time, everyone, safe trading.